Are you tired of picking stocks that just sit there, or even worse, drop right after you buy them? What if there was a way to see what the big institutions are buying, before the huge moves happen? Well, in this video, we're going to break down ICT's method for building a super high probability buy list. Let's get right into it.
Welcome to AI Explains ICT. Today we're jumping into a really critical piece of the core content puzzle, Month 10, Episode 16. This is where ICT shows us the exact framework for finding the best stocks to buy. Seriously, you're going to want to grab a pen and paper for this one, because it's a process you can use over and over again.
So here's the game plan. We're going to walk through this step by step. First, we'll talk about how to build a solid bullish watch list. Then, and this is super important, we'll cover timing the market and using seasonal tendencies. After that, we get to the secret sauce, the relative strength signal. We'll even put it to the test with a real case study on the Dow 30, run one final quality check using the weekly chart, and then wrap it all up into a simple recipe for you to follow.
All right, first things first. The goal here is not to boil the ocean and analyze hundreds of stocks. No way. This is all about being efficient. We're going to learn how to start with a big list, like the 30 stocks in the Dow Jones, and filter it down to just a small handful of the absolute best candidates. Now, before we even dream of looking at an individual stock, we have to zoom out. I mean, think about it. Finding a great stock in a terrible market, that's a recipe for disaster. So our very first step is to make sure the overall market environment is actually on our side.
And that really brings up a fundamental question, doesn't it? Is it always a good time to be on the hunt for stocks to buy? According to ICT, the answer is a hard no. There are very specific windows of opportunity where the odds are stacked heavily in our favor.
And here are the two big conditions we need to see. First, the overall market, the S&P 500, the Dow, it needs to look technically healthy and ready for a rally. Second, we only want to be operating inside of a seasonally bullish time of year. We're trying to put the wind at our backs before we even start.
So when are those periods? Well, ICT points out two main windows that are just perfect for finding these long swing trades. The first one is from February through May, and the second one is from October all the way through January. These are our hunting seasons.
Okay, so our timing is right, the season is right, now it's time for the main event. This is the core filter, the tool that lets us see the footprints of the big money, the institutions. We're basically looking for clues they leave behind in the charts.
And the key concept is something called relative strength divergence. Now, you really want to lock this in. It's when the broad market, like the Dow, is showing weakness and making a new low, but one particular stock just refuses to go down with it. It holds its ground. That is the #1 sign that big institutions are in there, quietly buying up all the shares and putting a floor under the price.
So here's what it looks like side by side. This is the whole magic trick right here. On one side, you've got the market index making a lower low. That's weakness, plain and simple. But at the exact same time, the strong stock we're watching makes a higher low. You see that? It diverges. That refusal to go down, that's our signal. That's the footprint of institutional buying. And here's what it looks like on our real chart. Take a look at Apple back in January of 2017. See that solid green line? That's the Dow Jones. Notice how it clearly dips and makes a lower low right there in the middle of the month? But now look at the candlesticks for Apple. It does the complete opposite. It makes a higher low. It just would not go down with the market. That's a huge, flashing neon sign that big money was propping this thing up, getting ready for the bullish season to kick off in February.
Okay, so let's really see how powerful this one filter can be. We're going to take this exact idea and apply it to all 30 stocks in the Dow Jones during that same time period back in early 2017.
And the result is pretty incredible. Instead of drowning in 30 different charts, by applying this one simple rule, find the stocks making a higher low while the Dow makes a lower low, we instantly narrowed our focus from 30 stocks down to just 6. That is the power of a really good filter.
And here they are. This was our high-quality shortlist. The only 6 stocks that passed the test were Apple, Boeing, Disney, Home Depot, McDonald's, and Visa. Now that is a manageable list we can really dig into.
Let's look at another one. Here's Boeing. And what do you see? It's the exact same pattern. The Dow, that green line in the background, takes a dip to a lower low. But look at Boeing. It doesn't even think about going lower. In fact, it gapped up. That is just incredible strength and another perfect example of a bullish divergence.
And let's do it again with Home Depot. You can see the Dow in the background making that lower low. But Home Depot? Nope, it held up like a champ, refusing to trade down and follow the market. And what happened next?
A beautiful rally from February all the way into May. The pattern is just so consistent. One more, just to really hammer it home, here's McDonald's. It's the same story, different stock. The market gets weak in January, but McDonald's holds firm, it diverges. This was the launch pad for a really powerful move higher that lasted all spring. Okay, so we've done an amazing job. We've gone from 30 stocks down to a short list of 6 potential superstars. But how do we pick the absolute best of the best? Well, that's where our final quality check comes in, the weekly chart test. We have to zoom out again to see which of these stocks is really coiled up for a massive move. And here's the core idea, straight from ICT. We're looking for what he calls a low-resistance liquidity run. In simple terms, we want stocks that are sitting right below a major old high. Why? Because institutions know that just above that old high is a giant pool of orders. Buy stops from shorts, breakout traders trying to get in, and they can use that rush of buying to fill their massive orders and launch the stock into orbit.
And this slide says it all. It's the perfect comparison. On the left, you've got Apple's weekly chart. See how it's just sitting there, coiled up like a spring, right underneath its old high? It is perfectly positioned for a breakout. Now look at Disney on the right. Sure, it passed our first filter, but look at the structure. It's trading way below its old high. It has a ton of traffic and resistance to get through. An institution is way more likely to pile into a clean setup like Apple.
And here's Boeing's weekly chart. I mean, come on, that is a textbook setup. Just like Apple, as we head into that bullish February window, the stock is just consolidating right at its old highs. This is the exact kind of coiled spring that institutions salivate over. It was absolutely ripe for a major breakout, and that's precisely what we got.
So, let's just put a bow on this whole thing. This isn't about guesswork or randomly picking stocks. It's a logical, repeatable process. It's a recipe you can use to find potential winners time and time again.
Here it is, the entire framework in 4 simple steps. Step 1, make sure the market and the season are on your team. Step 2, go hunting for that key relative strength divergence. Step 3, build your shortlist of only the strongest stocks. And Step 4, run that final weekly chart test and only focus on the ones that are ready for a clean breakout.
Hey, if this breakdown helped you and made this concept click, do us a quick favor and hit that like button, and be sure to subscribe to the channel so you don't miss our next deep dive into ICT's concepts.
And of course, if any part of this was confusing or if you just have questions, drop them in the comments section below. We have a real person who reads every single one and will get back to you.
All right, that's it for this one. Until next time, good luck and safe trading.